Some positive news on the hiring front, according to a new LinkedIn report out today. The data show that nearly 58% increase in U.S. hiring in July from June. Retail and entertainment saw the biggest job gains month over month, and while some industries like energy and mining are still seeing job losses. Important to point out, though, that those gains started to level out the last couple of weeks of July as there were peaks across the southern part of the country. Here to make sense of it all is Karen Kimbrough. She's chief economist at LinkedIn. Karen, welcome. Good to see you. The numbers, when you compare month over month, are in the United States are really quite gaudy. They're very exciting. They're great to see, and they suggest that the economy is coming back. But can you give us how the economy in terms of hiring compares today versus 1 year ago? How healthy are we?
Sure. Well, the answer is we're still about, in aggregate in the U.S., about 10% below the level of hiring that we had a year ago. So we're not all the way there. And on top of that, there's a big divergence between industries. As you pointed out, there are certain industries that are coming back pretty aggressively, but I'd point out that entertainment, one of those fast growers in the past month, is coming from a very deep trough. There are other industries that are coming back more slowly, and then there are industries that haven't come back at all. So it's a big range of pace of recovery. And as you said, what we're seeing is in this real-time data, a marked plateauing or leveling off of the data in the last couple of weeks of July and into this first week of August. So, our guess is that even if tomorrow's number looks okay, numbers coming forward are not going to be that great.
Karen, what does entertainment include for purposes of this measurement?
Sure. Entertainment can be anything from amusement parks to some of the big name, providers of movies and television shows. It's not tech, but it's the traditional entertainment of either physical entertainment. It could be theater as well, amusement parks, anything of that nature. And all of that, by the way, has obviously been shut down.
It's not food and beverage. It's not the restaurant trade.
No, but that also has been suffering from the sort of one step forward, one step back of the shutdown. So every time we reopen and shut down, those restaurants and beverage sectors are also struggling. We are seeing retail come back, however.
I want to go. I want to get there, and I want to talk about different cities and regions of the country where the hiring is stronger and or weaker. But how do we compare in terms of hiring with other countries around the world? Are we in the middle of the pack, top of the class, bottom of the class?
I'd say we're in the middle of the pack. We obviously had a really impressive acceleration in June, and we've slowed down. But there are other countries that have continued to accelerate. So France, for the last couple of weeks, has picked up 12% more acceleration in its hiring. Brazil is accelerating beyond us. But behind us are the UK and Australia, both of which have been recently hit by rolling shutdowns and a rising incidence of the virus. So that is having a kind of a dampening effect on their pace of hiring, and they're lagging behind us.
So the strongest sectors: entertainment, corporate services, retail, transportation, logistics. Tell us about cities that are doing better than the mean and those that are lagging in terms of year over year or month to month hiring growth.
Well, actually, every city is still down year over year compared to a year ago. But 15 of the cities that we're tracking have posted double-digit gains in recent months. And so the cities that are closest to getting back to normal are, a lot of what I would call maybe the second cities: Phoenix, Nashville, Detroit, also Miami. You may not call that a second city. And it might be that those are cities where they reopen sooner. It may also be that they're cities that are relatively cheaper, because where we're seeing cities not come back are the ones that are large urban centers and known to be expensive. So New York and Seattle, for example, are still 30% below where they were a year ago. And that suggests that maybe the hiring isn't being localized there. It may be going elsewhere. And frankly, our migration data seems to suggest that people are choosing to move around when they can to cheaper places to live, especially if they can work remotely.